Numerous M&A deals have been proposed and completed within the healthcare sector already in the first 8 months of 2024, and there's a strong case to be made for this trend continuing. A significant volume of patents held by the large cap pharma companies are due to lose exclusivity over the coming years, leading to many of these companies indicating a desire to replenish these portfolios and the pipelines feeding them. The fragmented nature of the healthcare sector also remains a candidate for consolidation, and biotech valuations, particularly within small and mid-cap segments, trade at historically low levels, despite this area of the life sciences delivering a far greater share of innovation, both in terms of clinical trial pipelines and FDA approvals. All these characteristics suggest corporate activity should continue, if not accelerate. This sector is clearly sensitive to policy changes and will be under the spotlight should the balance of power change markedly after the US election. However, there's significant innovation happening within the life sciences, and the long-term drivers to this sector continue to present noteworthy investment opportunities. And today we discuss all these topics, amongst others, with Trevor Polischuk at OrbiMed. Welcome to the Investor Insights podcast, hosted by Killik Co. My name is Gordon Smith, and in each episode, I'll be interviewing portfolio managers from across the investment industry to gain from their expertise in the specialist areas in which they invest, and to question them on topical issues. You can access the full series of interviews via the playlist on the Killik Co YouTube channel, or by searching for Killik Co's Investor Insights on Spotify, where you can subscribe and be notified of future episodes. We hope you're enjoying the discussion so far, and you can get in contact with us about any of the topics discussed via the email address investorinsights@killik.com. Killik Co is an independently owned wealth manager which opened its first office in 1989 and provides services to help families save, plan, and invest. And you can find more details on the unique ways in which we do that at our website, killik.com. In this week's episode, we were joined by Trevor Polischuk, a partner within the public equity investment team at OrbiMed, and alongside Sven Borho, one of the co-portfolio managers responsible for the stewardship of the investments of the London-listed Worldwide Healthcare Trust, ticker WWH. Trevor joined OrbiMed in 2003 and became a partner in 2011, having previously been a senior research analyst at Lehman Brothers. He holds a Ph.D. in neuropharmacology and gross human anatomy. We have covered the healthcare and life sciences sectors several times in the Investor Insights series so far already. We had a discussion which included topics such as the requirement for change within the sector to deal with the ageing population and the need to reform the delivery of healthcare to improve outcomes and achieve better value for money, with Paul Major, the manager of the listed, small and mid-cap focused Bellevue Healthcare Trust back in episode 6 of the series, as well as a discussion around the next generation treatments using new modalities such as cell and gene therapy to address disease, with Chris Hollywood at the early stage investor Syncona in episode 14. Today we explore the sector again with another highly experienced investor within the sector, and one that is supported by an extensive team at OrbiMed, the specialist healthcare investor with over £17 billion of assets under management. The Worldwide Healthcare Trust is a £1.9 billion market cap UK investment trust which invests globally and in aggregate with a larger cap focus across the pharmaceutical, biotechnology and related companies in the healthcare sector. We hope you enjoy this discussion, and as always, please do get in touch if you'd like further information on any of the topics discussed. Trevor, good afternoon. Thank you so much for sparing some time today. How are you doing?
I'm great. Thanks, Gordon. I appreciate the invite, and thanks for your time.
Not at all. No, it's great to chat to you. So, Trevor, we've got this kind of standard opening question for these discussions, and what it attempts to do is get a bit of an insight into you, or kind of maybe something you've been working on recently, or kind of what makes up a kind of typical working day for you. So I wondered if there was maybe an anecdote from a recent company meeting, or a bit of an insight into a research project you're doing, or maybe even just an article or book that you've read, anything that you could share.
Sure. You know, I think one of the unique things about being a specialist investor like myself in healthcare specifically is really sort of how adept you need to be in understanding science, technology to be able to properly speculate about what is really a rapidly evolving field of medicine. And I was thinking about, you know, if you were to be a fly in the wall of one of our daily portfolio meetings, it would sound less like a group of investors talking about stocks and more like a scientific lab or even a doctor's office, because we discuss disease states, new therapies, just released clinical data, and what it all means to the equities involved. You know, for example, at a recent meeting that we just had, because it's very timely, we are debating about a new unapproved therapy for lung cancer for patients who have metastatic disease. So these are patients, are severe patients, their disease is spread, but have failed the standard of care in the treatment of their disease. And what would this new drug have to show from a survival benefit to be clinically meaningful? We debated that. What would it need to show to get regulatory approval, and what would it have to show to be commercially successful? And so that's kind of the things that we do every day at our firm. And in this particular example, we're going to find out next month as those data get released. So stay tuned.
Okay, good stuff. Yeah, no, good insight into some of your meetings. Yeah, thank you for that. So my kind of first proper question is really kind of trying to get your kind of view on the kind of general state of the sector, really. I mean, investment markets over the last, 2 years now really have been driven kind of a lot by the kind of macroeconomic factors, which we found kind of overriding fundamentals in a lot of cases. But I wondered if you could give I know it's kind of quite a big topic, but kind of a general view on the underlying state of the healthcare sector, how it's performing fundamentally, and also maybe a note on the kind of what valuations look like on your universe at the minute.
Sure. You know, I think this is a rather insightful question, because there has been a seemingly constant string of macro factors that have influenced healthcare stocks for the past 3 years now, really starting from the beginning of the recovery trade. And I'm going back to COVID in early 2021, you know, after the COVID vaccines were launched, to today, the seemingly endless debate about interest rates that has characterized, you know, almost all of 2024. But when I think about the fundamentals of healthcare, the one word that comes to mind for me is strong, that the fundamentals are as strong as they've ever been. And this is simply due to a theme that I've been talking about for over a decade now, which is the staggering amount of innovation that is in the space right now. And it's the best and the most I've seen in my 25 years of being a healthcare investor. And yet, during this recent period, as you alluded to, many parts of healthcare have actually underperformed the broader market. So this includes biotech for sure, but pharmaceuticals at times, and even emerging markets where we also are involved from a healthcare perspective. And so what does this mean? It means that relative valuations are very undemanding. And in some cases, like in the case of biotech, they're just off of historic lows. So from a timing perspective to enter healthcare, I think it's very attractive.
I mean, that was quite a good segue. My next question was going to be about biotechnology. I mean, you can kind of see from the kind of long-term allocation of the worldwide healthcare strategy that you have always tended to have a pretty material allocation relative to kind of broader indices, anyway, to biotech. Could I maybe ask you to delve a bit more into that particular kind of subsector, the kind of general themes to where your positions, kind of what makes up that allocation at the minute?
Sure. First of all, your observation is spot on, Gordon, that we've been predominantly or significantly rather invested in biotech really since the inception of the trust. For us, that's been one of the key long-term recipes for success over the past 30 years now. And it goes back, it starts and stops with that word I've already used, which was innovation. And innovation in the biotech industry really inflected around 2010. And the reason I go back that far is that's when we really had the maturity of the genomic revolution, which started back in 2000, but the ability of the genomic revolution to impact drug development and discovery really became mature around 2010. And at that same time, that is when the inflection of the performance of the trust really started to happen, especially relative to our benchmark. And the accelerating speed of technology development has also been a key tailwind. And what does this all mean for us today? Well, this is a staggering observation, but 2/3 of the entire therapeutics pipeline, like where all the medicines come from, 2/3 of that pipeline originates from biotechnology companies. And half of all drugs approved today, that are being approved today, originated in a biotech company. So, and this is despite the bar for getting a new drug approved keeps getting higher and higher every year. So really, biotech is essentially the therapeutic engine or the innovation engine that drives so much of healthcare today.
Yeah, no, thank you for that. Yeah, it's some really interesting stats in there. M&A activity has often been a pretty significant feature of the healthcare sector. Kind of, it's obviously ebbed and flowed over time, but often it is always there, really. And I know the strategy itself that kind of actively targets that. You often talk about this kind of basket of target candidates that you have exposure to. Could I ask maybe kind of what's your kind of view on the prospects here, maybe in relation to or in the context of history, or and are there any kind of general themes to where you are most expecting deals to be done over the coming years?
Sure. So, every January 1, I wake up and I'm optimistic there's going to be M&A in healthcare, especially in the biotech space. But M&A as a major theme in biotech really inflected beginning in April of 2022. And I think this is when the current wave that we're still heavily involved in really started to inflect. And I have to give credit to my co-manager, Sven Borho, who first recognized it at that time. After a difficult 1.5 year period in biotech, we started to say M&A really start to move. And we did try to capitalize on it as best as we can. And that's when we first constructed this basket of stocks that you alluded to, Gordon, which is a predominant part of the portfolio still today. This basket, a proprietary basket of biotech companies that we felt were the most likely targets for large company takeovers. And this has been a really efficient way for us to gain exposure to a plethora of single stocks, because many of these biotech companies are non-profitable, small market cap stocks with poor liquidity. But we look for names that have certain characteristics that fit this theme. So first of all, they have to have really good science, right? They need to be in a hot area that people are looking for, whether that's like oncology or obesity. Management team has to be a willing seller. We have to have a good relationship with them to know where their mindset is. Are they trying to build a business, or are they looking for an exit? And then sweet spots of what is the market cap, what stage of development is the product in, and then putting these companies in a basket helps us make it very much more portfolio manager friendly. It's easy to manage. It's liquid. It reduces single stock risk, and we can populate this basket with over 50 different names. And think about that. That seems like a big number, but the universe of mid-cap biotech is more like 1,000 names. And it's totally managed by us. We constantly reconfigure this basket. We probably do it on average about once a quarter, but we can do it at any time. And this is not an off-the-shelf product. This is proprietary to us and the Worldwide Healthcare Trust and the broad biotech team that helps us configure it.
Yeah, no, really interesting way of getting exposure to that kind of theme within the market, for sure. Yeah. Trevor, we can't not have a conversation with you and not talk about GLP-1s. So I wondered if we could kind of touch on that now. I mean, the kind of use of diabetes products for the treatment of obesity. I mean, it's been such a huge theme within the sector for a little while now. You've seen those kind of really outsized returns from a number of the kind of early movers. Could I ask you to talk you through your kind of outlook there? And I mean, clearly it's going to be a huge area, but also a potentially competitive one. Kind of how are you kind of positioned there at the moment?
Sure. Yeah, absolutely. Obesity has clearly been the most exciting phenomenon in healthcare, really starting last year and into this year. And one barometer that I use, Gordon, is if my mom knows about it, it must be big. I think that's where we're at. But really, it's for good reason, though, because I think we're just on the precipice of the biggest drug class we have ever seen. Bigger than any oncology drug class, bigger than we thought Alzheimer's could ever be. And really, we're just getting started. And that's what's really exciting. And, what's funny is what a lot of people don't understand about GLP-1s is that this class of drugs has been around for almost 20 years already. So really, this is part of the innovation arc that I'm talking about. And we're just I don't know if at the peak of that, well, we're not at the peak of that innovation arc, but this has been building for 20 plus years, led by two companies that everyone knows now with Eli Lilly and Novo. So we've been building to this point in time. And what's really new and exciting now is that the efficacy and the safety of the current drugs on the market is absolutely incredible versus what we saw, let's say, a decade ago. And I would also characterize like the nexus of the huge unmet medical need in diabetes and obesity. And depending on who you talk to, that addressable market is 1 billion patients worldwide. But you take the nexus of that unmet medical need, combine it with social media, and some of the stories we've seen has really triggered the explosive uptake of these drugs over this past year. And let me point out some really important other facts here. This isn't just about diabetes and obesity, but now we've had some really impressive data in this class of drugs that shows that they have cardiovascular benefits, that they prevent heart attacks, they reduce strokes, they treat heart failure, they lower your bad cholesterol, they lower your blood pressure, they help with sleep apnea, they treat liver disease, they treat kidney disease, they help with pain associated with osteoarthritis. And just yesterday, Eli Lilly presented some data that shows that these drugs are amazing at preventing obese patients from getting diabetes. Preventative medicine and cures is the holy grail of healthcare. So that's what these drugs are getting into, and they're not done yet. Their next generation drugs from Eli Lilly and Novo are already in late stage development. And we're going to get data on those drugs later this year and into next year. And yes, the competition is big. It's fierce. Everyone's jumping in the pool with the GLP-1 or some sort of derivative type product. But those are all early phase products. Everyone's phase 1, maybe just starting phase 2. So they're years out. Right now, the runway is really Lilly Novo. Doesn't mean there isn't exciting opportunities for additional entrants moving forward. But Lilly and Novo are very predominantly featured within the trust right now. Lilly, with its most recent move to an all-time high here, is just over 10% of the portfolio. Novo is approaching 7%. But we also have some of the big companies that have early stage opportunities that can be there at the end of the decade, like a Merck, like an AstraZeneca, also in the portfolio. This is the number one topic for us. This is what I spend most of my time working on. But it's perhaps the most exciting thing I've ever seen in my career.
Interesting. Yeah. Certainly lots to play out there. Some huge numbers in terms of that addressable market for these products. Trevor, can we move on to the tricky topic of the US election, if I may? I mean, I just wondered how you guys are navigating kind of this year as we kind of fast approach that election? And I wondered if you're kind of looking at kind of those differing scenarios of what may play out in terms of policy. It's a sector which is just so sensitive to policy at the end of the day. How are you kind of approaching things?
Sure. Well, an election year is always noteworthy as a healthcare investor. But this election year has had some real drama. The 3 weeks in July that started with a presidential debate, which was one of the lowest points in U.S. political history at the end of June. That was followed by an assassination attempt here in the U.S. on the previous President Trump. And then just more recently, we've had this historic event where we had an incumbent president step out of the election race, conceding the opportunity to his vice president in Kamala Harris. So the events leading up to this have been certainly dramatic and unprecedented in history. But despite all of that, I don't think it changes our expectations much. You talked about, what are the probable outcomes? And I have to sort of walk through them because I think it's really important. Because for us, the highest probability event is status quo. And what I mean by that is a split federal government, meaning the presidential seat, the Senate, and the House are controlled by some mix of Democrats and Republicans. And when we have that situation, which is what we currently have right now, it's very difficult to get controversial legislation passed. That's a good thing for a healthcare investor, is that there's no looming legislation that really scares people or any uncertainty about it. So that's a best case scenario. I think that's also the most probabilistic event or outcome for this. But another possibility is a Democratic sweep with Harris taking the presidency. And I think this makes the market the most nervous if the Democrats are in full control of the government here in the U.S. But what does that really mean for healthcare would be the big question. I would argue not much. Why is that? Well, Joe Biden's presidency will be noteworthy for one of his signature pieces of legislation, which was the IRA, the Inflation Reduction Act. That name is meaningless, but what that legislation did include was drug price reform here in the U.S. It has come, it is law, it's in process right now as we speak. And Biden's VP, Harris, was a part of that policy. So while she might attempt to expand it if she takes office, I think the major legislation is already in place. So it doesn't create much uncertainty, just really how big could it come. So I'm a little bit less worried about that than the market might be. And then the third possibility, of course, is a Republican sweep. Trump gets back into office and they take control of the House and Senate. That is historically a very positive outcome for healthcare investors. The Republican Party has been very industry, healthcare friendly historically. Quite frankly, the industry thrived under a Republican administration and Trump's presidency last time through. So while there will be a lot of headlines and a lot of twists and turns along this path as we get to November 5th, I'm as calm as I can be, given that we're in an election year. Usually they're very volatile. I think it's going to be a little bit less this year.
Yeah, no, some really important points in there. Thank you for laying out those scenarios. Trevor, I wondered if I could drag you back around to the innovation or some of the kind of more emerging areas of healthcare innovation that you're looking at the moment. I think it's noteworthy that OrbiMed manage a kind of range of mandates, not obviously just the London listed strategies, but you've got significant assets within private equity and some of these kind of earlier stage companies as well. I just wonder that must give you and your team kind of a lot of insight into what is kind of coming through. I'd be really interested if there are kind of any particular areas that you're looking at that's kind of starting to present themselves within those kind of areas that might come through to the listed portfolio.
Right. Yes, Gordon, that's a great question because there is a lot. There'll be a lot to choose from, and it's a little bit mind-boggling at times of what's happening from an innovation perspective. And And like I said, that pace of innovation continues to accelerate, and artificial intelligence has had a lot to do with that. Not only in drug discovery, but also in drug development and all parts of the industry chain. And there's some interesting opportunities there. But one area that has taken a bit of a back seat to the obesity craze, but that's really on fire, is something called ADCs. And that's an acronym for antibody drug conjugates. And what these medicines are, these are like ninjas almost. These are injectable drugs that enter the body, and then they search and look for cancer cells to destroy tumors, but not wreaking havoc on healthy cells and the rest of your body like normal traditional cancer medicines would do. So it's like a heat-seeking missile, just seeking out the tumors. So ADCs, in my opinion, are raising the bar on both efficacy, but also safety across a spectrum of cancer types. It's a very exciting space, especially as they begin to mature into commercial products, and where investors can really see the potential outcome of what I think is the next sort of revolution in the treatment of cancer.
Yeah, no, really interesting. Yeah, I like the analogy of a ninja and a heat-seeking missile. You should use those more often instead of the acronyms, maybe.
Sure.
Trevor, our kind of last question is another standard question, and it's one that asks the speaker if there was one particular area that is kind of highest conviction at the moment. I appreciate you've talked through a number of areas, including the GLP-1s, but if I was to kind of push you for one, whether it be an area or a stock that you have particularly positive view on at the minute, what would that be?
Right. Well, I'm going to go a little bit off the board on this one, and I'm going to pick a Japanese pharmaceutical company called Daiichi Sankyo. Partially the reason for that, I'm going to lever my previous answer about ADCs, because Daiichi is the worldwide leader in ADC development. So they have a big army of ninjas at their disposal. And they've launched one of their products already a blockbuster product, and a blockbuster product in my world means sales of over $1 billion annually. In fact, I think it's just eclipsed $1 billion quarterly, and that drug's called Enhertu. But they have no less than 4 additional ADCs in mid-stage development at that company. All of them can be individually blockbuster products. And as they commercialize this ADC franchise, this is going to allow this company to grow double digits or better well into the end of the decade, allow them to double their revenue base, which is currently $10 billion, to $20 billion US before the end of the decade. They have important partnerships with AstraZeneca. They have important partnerships with Merck. Both those companies are also featured in the portfolio because of not only their ADC franchises, but other things that are going on. But also I bring this up to you, Gordon, as well, because this is a very timely topic, as we're going to get fresh data on the majority of their ADC franchise throughout September on 2 different global medical congresses where the company will be presenting data. So maybe if the data look good, you can have me back and we'll recap what happened there. Or you can just buy the Worldwide Healthcare Trust.
Yeah, no, good points. Yeah, thank you, Trevor. It is really fascinating to chat with you and get your common thoughts. I really appreciate your time today.
Sure. Thank you, Gordon.
Thank you for listening to the Investor Insights podcast, hosted by Killik Co. You can get in contact using our podcast email address, investorinsights@killik.com. For more information on any of the topics discussed, or for further details on the services offered by Killik Co. This podcast is not personal advice. The content is intended for educational purposes only and is not investment research or a recommendation to buy or sell any financial instrument or product, or to adopt any investment strategy. The value of your investments can rise as well as fall, and you could get back less than you invested. Past performance is not a guide to future performance. The investments referred to in this podcast may not be suitable for all investors, and you should seek advice from a qualified investment advisor. Killik Co is authorised and regulated by the Financial Conduct Authority, the FCA.